What is going on, you guys? Welcome to the video. Today we are going to be looking at 3 spooky stocks to buy going into the month of October. And for those of you that have been asking, out on Monday is going to be a strictly Canadian version of 3 stocks to buy. I'm over here in Canada, guys. Gotta show some love for the Canadian people. So keep an eye out for that video if that's something that interests you. Now, I just want to take a quick second, and for anybody that's interested in supporting the channel, I did decide to start up a Patreon page. For $3, you can get access to my personal portfolio, see exactly the stocks that I own. You can also opt in to stay updated with any trades that I place. The link will be in the description for you guys below. But most importantly, what it does is it does help support the channel. So if you're somebody that's considering that, I mean it from the bottom of my heart. I appreciate it. And even if you're not, man, hey, no hard feelings, all right? Maybe just drop a like on the video. That also helps support the channel, and that doesn't cost you a thing. So let's get into the first stock for today's video. This is a company that I have not yet talked about on the channel. This is the largest retailer in the world, generating upwards of $500 billion in revenue. I own it in my portfolio. It's the company Walmart. And this is a company that I know some of you will say, oh, it's gonna get killed by Amazon, whatever. I don't think that's the case. I don't necessarily agree. And this is a company that I am more than proud to say that I am a shareholder in. Walmart has over 11,700 locations in over 28 countries. It's an all-encompassing, one-stop, low-cost retailer. I love shopping at Walmart. We just had our first one open up here in Richmond, where I'm from, and whenever I get the chance to pop in there, I will, all right? I don't know why, but I'm just such a big fan of Walmart. But from an investment standpoint, what I think is very promising, other than this company just being enormous, the company's sheer size allows for significant cost advantages. Economies of scale is a term that you'll hear with a company like this. We can think about even just the real estate that this company owns. All positives in my opinion, but in particular is the company's commitment that they've been showing to growing their online or e-commerce presence. Clearly over the past number of years, the one dog that there's been on Walmart is just this lack of an online or e-commerce platform, and the fact that they were going to get eaten alive by Amazon. But taking a look here at some of their recent acquisitions over the years, they acquired Jet.com in 2016. The recent one in the news, the big one for Walmart, is of course their acquisition of Flipkart, the Indian e-commerce company. They're in the final stages of closing out that deal. One that people may not be aware of is that they actually own about a 10% stake in JD.com. So actually, not a bad footprint into some of these Asian and developing markets. And although they may not be able to compete with Amazon like head to head, they're not going down without a fight. And that's what I like to see. And they're actually seeing some decent growth out of their e-commerce division, up 40% in their most recent quarter. One thing that we can't overlook with Walmart is that this is a company that, year round has the ability to pull in revenue. Groceries, consumer staples, that is an ongoing need. And especially coming up to the holiday season, this is a time that retailers typically tend to do very well. So especially where we stand in today's market, the reality is we are coming towards the end of a cycle. And it's times like these where I think it's very important to be holding defensive stocks like this, Walmart being a prime example. The stock trades for $94 per share. It pays a 2.19% dividend. They've increased this annual dividend for 45 consecutive years. Walmart is a great company to own, guys, and that is why it is my first stock to buy in October. Moving on to the second stock for today's video, it is another great investment for the long term. It's the company United Technologies, ticker UTX, and it trades on the New York Stock Exchange. And United Technologies is a company that maybe you're not familiar with. It's not necessarily a household name that many people would know, but they do have some companies that they own that you're probably familiar with, in particular, Otis Elevators. They're also involved very heavily in the aerospace field. They own a company called Pratt & Whitney, making these jet engines for these big airlines, even military planes. As well, they're involved with developing, airplane parts, brakes, landing gears, etc. Another aspect of their business, climate control. So those HVAC systems, those systems that you'd have in your residential homes, even commercial buildings, United Technologies is involved in all of that. And I mean, Otis Elevators, this is the largest largest elevator manufacturer in the world. This was the company that actually created, back in the day, the first ever passenger elevator back in, I believe it was 1857. So clearly some history behind this business, behind this brand, and I'm sure you guys are familiar with the company Otis. They control nearly 20% of the market share in the elevator space. The number one player over here in North America, Europe as well, and a very large player over in Asia. And the reason that I really do love this company, and there are multiple reasons why I like this company, but in particular, what I think makes this such a powerful company is that when they go to install an elevator or a jet engine or a big piece of machinery, more often than not, they aren't making a bunch of money on that installation, the initial, installation of these pieces, but these big pieces of machinery, they require maintenance and upkeep for years and years down the road. And what the company will do is they will sign like a 10 or 12-year contract to provide that ongoing maintenance or that ongoing upkeep. And this is actually where the bulk of United Technologies' revenue comes from. It's very high margin. It's what they would call the aftermarket services. So you think about it, man, what a powerful business model when you think about all of these outstanding machines all across the globe. They all need maintenance, and you know that, hey, for the next 10 years, I'm getting this very reliable stream of cash flow coming into the company. To me, that is just such a powerful business model. Now, just a couple updates with the company. They acquired a company called Rockwell Collins as part of just building up their aerospace division, which was already huge, right? They're a huge player in this space, but this just makes them that much bigger. This was a big acquisition at $30 billion. This deal is still pending, but looking to be closed soon. They do have some activist investors involved with the company, in particular, a couple guys named Dan Loeb and Bill Ackman. These are two, widely known activist investors in the space. What these guys typically will do is they'll take some stake in the company, kind of get in there and shake things up, just try to stir things around. And with this company in particular, what they are saying is that rather than having United Technologies operating as this big conglomerate, the company may be better off, spinning off its divisions and kind of having the different entities operating separately, operating on their own. They believe that this would be beneficial for the company. Again, these are just talks, but it is something that we will keep an eye on going forward. The stock currently trades at a PE of 21, which is below the industry average. Price to book as well below the industry average at 3.5. I'd say that this company is relatively fairly valued. It pays an above average dividend for its space. It's actually a very strong dividend company. If you're looking for a solid company with good dividend growth potential over the years, this could very likely be it. The stock trades for about $140 USD, and United Technologies is the second stock to buy going into the month of October. Moving on to the third and final stock for the video. This will be a quick one. It's the company FedEx, ticker FDX. And FedEx actually reported their earnings just on Monday, their first quarter earnings. They missed on the bottom line, but they did report, in my opinion, some strong revenue growth, up 11.3%. They also raised their earnings per share guidance going forward. We did see the stock sell off a bit on Tuesday, and I think that this may be a good opportunity to maybe go in and buy in on this little dip. FedEx has outperformed the S&P on a 5-year basis. Looking at this chart here, we see growth of 112% in comparison to the S&P at 71. I own FedEx. It's been a great performer for me this year, and assuming that the economy stays strong, I would expect to see this growth trend continue. When people are out spending, they're out sending packages, that's just a positive for FedEx. They're just going to grow and grow and grow. And for the likes of this video, we'll take a look here at their main competition, UPS, of course. The numbers, in my opinion, do look much stronger for FedEx. They have a PE ratio of 15 versus 20, a price to book ratio of 3.5 versus 44, and debt to equity ratio of 0.8 versus 8.6. So far less leveraged. The only area that they are lacking in, and lacking in significantly, is the dividend, which is far better for UPS. All in all, FedEx at these valuations, trading cheaper than the market, than the S&P, which trades at a PE of 20, it does look a little bit attractive to me, especially after a 5% dip on, again, what I thought was relatively strong earnings. They raised their guidance. Their long-term outlook still looks the same. I'd be happy chipping away a position. I do think that this is a nice company to own for the long term. Like I said, I own it in my portfolio. The stock currently trades at $240 USD, pays just under a 1% dividend, but FedEx is my third stock to buy in October. So guys, those are my 3 stocks to buy for the video. What do you think of my stock picks this month? Do you own any of these stocks? Feel free to let me know down in the comments below. And like I said, if you are interested in the Canadian version of the stocks, that'll be out Monday, so keep an eye out for that one. If you enjoyed the video, feel free to give it a like. It really does help support the channel. I really do appreciate it. And if you're not already subscribed, subscribe and hit the bell for notifications. I post a video every Monday, often more than just Mondays. I'm kind of aiming for at least 2 to 3 videos a week as of right now. So as always guys, thank you for watching, and I'll see you in the next video.